Companies that overlook their cloud adoption strategies risk overspending by 20 to 50%. To discuss this further, we have Yorit Pranger and Srini Sumansundaram from Cognizant. Srini and Yorit, what changes in the industry have made cost management more crucial today?
Traditionally, insurers have underspent on their IT compared to the peers, right? That's why they consider to be lagging behind the other industry groups. Now, when the digital boom is happening, they need to narrow the gap. On one side, they have the legacy IT infrastructure, and the other side, they need to catch up with their industry peers on the digital boom. If you look at the average IT spend, it's been increasing considerably around 7.5%. But when it comes to insurer, it is increasing much higher than the average industry spend. And this is basically due to the regulatory compliance, the higher regulatory compliance in the insurance, followed by managing your legacy IT infrastructure and cloud, and also experiment with the new technologies like Gen AI. It's becoming very critical that you need to have a proper governance mechanism to track it and manage the cost going forward. And you also need to look at the value IT is delivering to the overall business.
Following up on that, Yorit, what are the key challenges that clients are facing when it comes to deciding where to invest?
In our research, we found that it basically comes down to two key areas. One has to do with cost. And what we're seeing is that for organizations to decide where to invest, first and foremost, they need to understand what their actual spend is in the organization. And surprisingly, that visibility within organizations across industries and also in insurance is actually going down. It's gone down from 72% to 57% in the last 2 years alone. And not understanding what you're spending on technology, whether that's within your division or across the organization in other parts, is already a hurdle to overcome. Secondly, what's making it harder for organizations to decide where to invest is also the ability to articulate and identify value within the organization. When we asked industry leaders about this, only 35% say that they have that visibility, where 65% say they're really struggling to articulate that. And then on top of that, 67% of respondents are talking to us saying that they are not able to track value consequently across a time period. And that, of course, makes it very hard then to decide whether or not you're investing in the right thing. And when you have invested in something that you want to do, whether or not that's actually delivering the results that you were hoping for in the long term. And so that makes it very hard for organizations to make informed decisions based on the strategic priorities that they've set.
We help our customers, advise our customers on the IT strategy and advise them on where to invest. One of the key challenges we face is we support a lot of global customers with global, regional, and in-country operations. We see sometimes conflicting priorities, and the funding needs to come from one region, from global to local. We see many areas that are conflicting priorities. And second thing is we also believe some places IT is still considered as an enabler. But to get the right investments, IT should be considered as part of your partner for the overall business strategy. And that's only when you can get the real value out of IT, right? Those are all the two areas: conflicting priorities and seeing IT as an enabler rather than as a partner into the overall business strategy challenges the investments on the required areas.
Now, considering everything that has been mentioned, how can organizations effectively measure the value brought by technology investments? Go ahead, Yorit.
We see that that's actually the big challenge in our daily practice of working with clients. And first and foremost, it's about how do we define value in an organization, right? Typically, we define value by the return on investment and whether or not it would increase revenue. These days, obviously, a lot of other factors come into play, whether that has to do with employee or customer satisfaction, whether it increases value in terms of your overall productivity as an organization, and how you then want to measure that productivity. One thing that we feel is going to work quite well in the future and organizations could consider doing is, rather than trying to articulate value for very large-scale transformation programs with multi-year horizons that are hard to track because of so many things happening in parallel, is to break it down into smaller pieces and to think about business cases rather as something that you compound as you deliver a milestone and then you go into the next milestone. So it makes it easier to track. Having said that, what really comes down to also is to understand all the levers that you have at your disposal to create that value. Our research shows that within technology spend, and especially also in the value that it's trying to create, there's an interesting paradox, because what we're seeing, as Srini mentioned, is the overall technology spend is expected to increase even further, and especially in the insurance industry. But what we should not be seeing is that the overall cost profile of an organization also increases. But the reason for that is that we expect, for instance, technology investments in Gen AI to take over parts of business functions that were typically run by other parts of the organization. And in order for that then to drive value, we also need to look at the potential that still exists within organizations. We think that between 30 to 50% of value or technology spend is wasted. Or if you look at it more from a glass half full perspective, there's still 30 to 50% of potential in organizations without having to increase your technology spend. And in order to address that potential, there's a few levers one can pull to start creating that value. And obviously, it starts with intelligence and transparency around cost and value that you're trying to create. But we also think there's quite a lot of value to be found in changing the ways that you work as an organization, and specifically as a technology function. And by that, we mean improving the engineering excellence, for instance, in your organization by shifting from a project to a product approach, as an example. And the third part is that we see that there's a lot of value still to be found in architectural simplification. Srini mentioned it already earlier. There's a lot of legacy in the insurance industry. Being able to simplify that and reduce the drag that it puts on your organization will also release a lot of cost that you can then reinvest in things that will create more value for you as an organization.
Yeah, I agree with you, Yorit. Just to add a couple of points, right? In this region, especially South Asia region, this has been a most sought advisory engagement. Customers are asking us to baseline, benchmark, and recommend in terms of their current, investments where they should focus. One challenge we tend to see is the baseline is a challenge because not all organizations effectively measure these metrics, right? And we also realize the value realization framework needs to include multiple dimensions, not just financial metrics. As Yorit mentioned, it needs to look at the customer experience, employee experience, sustainability, operational efficiency. There are a number of dimensions you need to take care on baseline and then compare against, and more importantly, where you want to be in the next 3 to 5 years. And that's going to drive how you're going to measure this, right? And that's what we are seeing. Industry is moving towards that, but a lot needs to be done to make it effectively measure the effectiveness of IT in business.
Thank you so much for joining us today, Yorit and Srini.
Thank you,
Thank
Simon.
Once again, our guests were Cognizant Yorit Pranger, Head of Insurance Consulting, and Srinivasan Sumansundaram, Client Partner and Head of Insurance for South Asia and China. For more news, please visit insuranceasia.com.